Oh no, wait a second. Hello, welcome everyone to another Sky Community Call. Today, as always, we have Rajiv giving us the state of liquidity, for lack of a better term, and to see how the market is behaving. Where do we see USDS and whatnot? And then we have Rune continue the discussion. We will touch on staking, the allocation system, and treasury management. So yes, thanks for all your questions in advance. You can put them in the chat. And thanks for joining. Rajiv, if you would like to join us.
Perfect. Hopefully everyone sees my screen. What you'll see, it's been quite an uneventful 7-day period. So this is probably going to be quite a quick update from me. I'm going to jump straight into the USDS ecosystem. Let me just go back to all. But you'll see it's been quite flat. As always, if we look at a more granular level, we do see certain trends playing out. So USDS supply fairly flat over the week. We have corrected for the multi-chain calculations that we talked about last week, and I'll go into that. But starting with some of the trends, the first one is the Pendle growth story continues, driven by the USDS points market. And Pendle has actually flipped Aave now to be one of the big three demand drivers. So together with token rewards and the savings rate. So good momentum with Pendle. With Aave, we've seen a continued drop in the USDS supply there. As we discussed last week, that's not necessarily a bad thing. And again, this week, and I'm going to um, switch to another tab, we see that's being driven by continued demand for USDS in the on the borrow side, and that's happening both in Aave and also on Spark. So that trend very much continuing. If I go back to our main screen, with token rewards fairly flat, nothing to really comment on. Sky savings, you can see the breakdown below. You sort of see this a bit of a bump mid-period that's been driven by Maple. Otherwise, it's been fairly stable. So the deployment of funds from Syrup USDC held in short-term liquidity has had an increase, and then they've withdrawn in the last few days. On And then the last thing I wanted to touch on is really the multi-chain discussion that we had last week. We have corrected it to reflect the actual circulating supply and the true demand. And we've been able to do that for Arbitrum, Optimism, and Base, but not yet for Unichain because we just don't have that data available in June yet. But what you'll see is the numbers are significantly smaller than we had previously reported. I'll go into more detail on all of these. When it comes to USDS, Base is really the bulk of it. When it comes to SUSDS, you'll see we're having much more um, demand. And I guess to be expected, SUSDS is the demand driver on these L2 offerings. We will correct this for Unichain as well as soon as we can, but you can see that sort of difference in magnitude of roughly 4 million versus 100 million for USDS versus SUSDS. For those who are interested in actually getting into much more detail, we have attached a link for a dashboard that dedicated to multi-chain analysis, which I'll switch to now. And what we've provided here is for each of the chains. So for Base, for Arbitrum, for Optimism, and we'll keep building these out as we add more. An overview of the holding groups for USDS, for SUSDS, but also we thought it'd be interesting to show the holdings within the PSM3 on each chain. I've already filtered out for the PSM3 and Spark ALM so that we're showing the genuine demand. And the one thing I'd call out here is actually just the dominance of Spark SUSDC offering on all of these chains. So you'll see it here on Base. It's also the big driver on Arbitrum and ditto for Optimism. In fact, off to a flying start on Optimism. So that's the update, the major updates for the week one, and I'll hand back with that.
Nice. Thank you very much, Rajiv. I don't know if anyone has any questions, or Rune, if you want to comment on anything to dive deeper.
Yeah, I don't have any questions myself.
Nice.
Looks pretty straightforward. We've had some like about 100 million or so in growth.
Mm-hmm.
So nice and easy, but obviously we want to see much more dramatic and explosive growth than that once we get rolling with the stars and like proper marketing and expansion and growth initiatives. All right, well, I guess we will switch right into Rune Radio. So today is a bit of a lot of interesting stuff is gonna come very soon. That's all I can say. So today is like a little bit of we just like basically filling out the time while we're waiting for all the launches that are coming. And so I'm just gonna continue where I was talking about a week ago regarding staking and how that's gonna how that currently works, how it's gonna change with the treasury management function and the change of bring the core to 0 fixed expenses. And then there's also the allocation system, which I also want to get into because that's interesting to just talk about in the context of like growing demand for USDS and growing revenue for the protocol, and how that sort of ties into having the stars, having the stars come out and launch. But as always, most importantly, is really just an AMA, right, or Q&A session. So just write all your questions about latest stuff you want to, latest thoughts or things you want to hear updates on and so on. But then other than that, I will just like go into a quick review. So just to recap how staking currently works, right? So basically, before staking was activated, which is now 10 days ago, I think, the protocol was buying 500,000 USDS worth of Sky per day. And then this got then changed to the current model, which is there's a 250,000 USDS buyback, and then there's a 250,000 USDS staking reward distribution per day. And this is like currently set through governance action, right? So it's actually the way it currently works is basically that the risk advisors, BA Labs, they have the ability to propose modifications to this based on a sort of a general spirit of the Atlas around that obviously it should be sustainable and it should make sense to do buybacks. It should, when buybacks happen, it should really make sense in terms of value for money, right? And this is also what's meant to be like, that's how it's like built in. It's going to be built into the treasury management function, which I will get into later. Then what's coming at some point in the near future is star token launches, right? Starting with the Spark SPK token. And when that launches, a part of that is going to go to directly to stakers. And then around that time, that's going to be the right time to start adjusting down both how much buyback is happening, but also how much USDS rewards is being distributed, with the goal of then maintaining roughly the same level of rewards overall, right? So by waiting for the SPK token to start being distributed to stakers, then it's possible to reduce the kind of the burn rate, effectively, like the amount of USDS that's being spent out of the surplus buffer that can be reduced without having sort of a sudden negative impact on the staking rewards on Sky. And then the other thing that's coming is the ability to generate USDS and to borrow against the Sky that's actively earning staking rewards. And this is all a system that's coming and will be funded by the yUSDS token, which is this like special a kind of like a risk type of token, like a junior risk token. You could think of it as like basically a token is going to take additional risk, but then also get a higher reward, and then in return the amount of capital that gets deposited into the system through yUSDS is going to then make it possible for Sky stakers to generate USDS, borrow with their Sky as collateral, and then you have kind of the ultimate DeFi position, right? Something that both earns a yield, but then also has good access to unlock liquidity. Yeah, so I think that's really great to finally get that sorted. So that's kind of a long something that's been a long time coming. With Maker historically having had sort of a complicated and difficult to like a sort of advanced tokenomics that did not necessarily showcase their value so directly to the end user. But now we've got something that just is very sort of in your face in terms of you get the staking rewards and you get the ability to borrow against it, and it's all like packaged into the same system, right? It's available to everybody. Then I want to talk a little bit about the allocation system, and for that I'm gonna just share my screen. Oh yeah, this is a good question about Chronicle, but let's talk about Chronicle in the end. That's like a good sort of misc question. So it's a very interesting topic in my opinion. But let me just, yeah, here we go. Screen Excalitron. All right. Okay, so this is like the famous allocation system diagram, and the way this is not like basically this is like the really advanced like view of basically Spark already has a kind of a very simple version of this already running today, right? Which is that they basically have these things called conduits. So that's the conduit is kind of like the kind of the general term used for basically the mechanisms that stars have to use the allocation system to deploy capital into different endpoints. Okay, now it's all, I don't know, this is a mistake. It's all written. Let me see if it's better over here. Yeah, okay, so here, I mean, this one is more complicated, but this doesn't have missing, like sort of it doesn't have the wrong labels at least. So so basically you have the so-called planner, which is like basically like almost like a trading bot. You could think of it as a trading bot that the Sky GovOps system is running. So it's in a sense it's like hybrid decentralized and centralized, in the sense that it runs with centralized efficiency, but there are security measures that means that it's secure as if it was decentralized, in the sense that it can't just like explode and then a lot of money gets lost. And then it has these multiple conduits. So here there's just like, I mean, in this diagram, it just shows Morpho and Aave, right? So like two possible endpoints that Spark, for instance, is deploying capital into. But then what you do is you like calculate all this stuff. So this is just like I mean, even this is like a very simplified view of actually how complex it is to figure out all the relevant data related to each of these conduits, right? So everything around like what's the cost of deploying into Aave, and what's the benefit of deploying into Aave, and then what's the cost of deploying into Morpho, and what's the benefit of deploying into Morpho, and then there's RWAs, and every single star will have like their own conduits, right? That they specialize in basically dynamically allocating to. And then also what all the stars need is risk capital, right? So they need to over collateralize the risk they take so that the risk profile is uniform. So this is why it's possible for a star to deploy into things like Aave and Morpho and these other types of DeFi protocols out there that they're deploying it to, yet it's ultimately backing a very safe stablecoin. And that's because they also have to add additional risk capital on top to credit enhance. And that's also why there's like a cost, right? So you can't just like freely deploy into Aave and just pay whatever it costs to borrow the USDS. You have to actually also pay the cost, or you have to source the risk capital in some way. And then every star does this, and then that's basically how, then ultimately, as long as they deploy more and more and more, they basically borrow from Sky at the base rate, and then they deploy into these conduits. As long as they're doing that, then the supply of USDS will keep increasing, right? Because they'll be generating USDS and they will be basically deploying it and selling it into the market. And then eventually what happens is the demand, like there's not enough demand to match the amount of new supply of USDS on the market. And the system then detects this with some very simple heuristics and adjusts the rate upwards. And the other thing can also happen, right? So if there's too little, if they kind of pulling back, if suddenly the cost of deploying into Aave stops being worth it, then the allocation system for each star will all be pulling out of it. Will pull out of Aave, right? Until basically the rate on Aave has reached a point where it starts making sense to deploy into. So that, and then because of that, then you either have too much supply or too little supply. And then depending on how the imbalance exists, the rates, what's called the base rate, so the rates of the entire Sky ecosystem will go up and down for everybody. And so that's why eventually the rate will be very dynamic. It'll be constantly changing and it'll be very competitive. The reason why that hasn't happened yet is because we only have Spark allocating with the allocation system right now. So the full dynamics of the system haven't kicked in yet. But once that actually starts, you're going to have, basically, eventually, right, there'll be maybe 10 or hundreds eventually stars that will all be running infrastructures like this, right, that are in real time analyzing all of the data and just trying to make the best possible deployments that they can. And then as they do this, they will be kind of pushing the rates up and down for each other. So basically the stars that are not competitive and not able to generate the best risk-adjusted return, they're naturally going to stop allocating their part of the portfolio. And instead what they'll be doing is they will be allocating their risk capital into the profitable stars instead, right? So the system is going to, even though it will be comprised of huge amount of fully independent and autonomous stars, as an aggregate, it actually acts as sort of as one big coherent unified system, right? Where that's able to effectively deploy capital where it is most valuable for the whole ecosystem as a whole. And ultimately that the baseline, the base rate basically, right? The baseline return that's earned after all the credit enhancement, that return ends up going to sUSDS holders. And this is then what will make sUSDS ideally the most competitive stable coin with a savings rate in the whole, globally, right? In all of finance, not just for crypto, but even in such a way that you will have any TradFi organization that's able to deploy into crypto and that's able to directly read risk data basically and understand the actual risk, they should be predisposed to deploy into yUSDS because it will just have the best risk-adjusted return because it uses this type of system, right? That's like fully data-driven end-to-end. Okay, let's see what where there is some yeah, okay, there's the Chronicle question. Yeah, we'll delay this later. Then there's this question with the documentation for the allocation system. So there's actually there's no like, I mean, there is some relatively recent forum posts and so on, but I actually think what's most relevant to look at is just the atlas. So let's try to take a look and see if we can find it in the atlas. Because nowadays, all of these things are basically written in there. So, oh no, that would be, well, the risk framework is going to be in here, right? So that's risk capital. Let me see. Yeah, I'm just clicking through. So A3B1. This seems like kind of, here's the fully implemented. Yeah, here we go. Okay, so here's an example of what? Why is this in a different? Oh, okay. So it's under implementation. Yeah, this is why it can be a little bit hard to navigate this when you don't have like the exact structure in your head. This is the rental system.
I found something run on 2.3.9.1.
What, like A332?
823.
I mean, this here is there. So this is like this is the really interesting stuff. This is the actual process for like calculate, so here's the formula and that kind of stuff. Leverage adjusted drift to risk rate. Well, yeah. I mean, look at this stuff. I think this must be in LaTeX or something like that. But you can take this, so you can find this, and then you can paste it into ChatGPT, and it will be able to basically tell you about what's going on. But this stuff is used. So like this is the risk framework that's used to calculate how much of the risk capital Spark needs, for instance, when it's deploying into things like Athena and Aave and all that. Now, it's not actually fully in effect yet. So it's not really being like, I mean, it's being followed loosely, but it's not being like tracked, and there's no penalty for not following it and so on yet. And I don't know if there even is yeah, if I kept looking, I would probably be able to find, there would be some place in here where you would have a panel, like a monitoring. Yeah, here we go. Penalty mechanisms. Severity of breach. Yeah, look at this stuff here. Greater than or equal to. Okay, I don't understand what that means. Blah, blah, blah. First 30 minutes, 500% yield. Okay, so there's actually penalties in place. But in any case, like it's not possible to track right now. And like this is more like this has been put in there so that the system is ready for becoming fully operational. But the allocation system isn't like practically fully operational just yet. It's getting really close though. And then one of the things that's needed is also having multiple stars competing and cooperating alongside each other. And you can also see, so if you go in here, let me see, demand side supply, you can also take a look at the actual allocation system primitive. So you have like, yeah, on like, yeah. Again, you can't really like so easily read this directly. And later on, there's going to be like systems that make it practical to actually understand this stuff. Right now, the best to do is like copy and paste a huge amount of the text and like put it into dashboard and API. Yeah, there's a lot of stuff here. So if you want to read about this, then just go to the atlas, and basically there's no end to this stuff. Clarify Bitcoin and Palantir parts of the tweet. Which of the stars do you think? Okay, so I'll get to these. Like, these are MISC questions. But since one thing I just want to get back to is the stop sharing. I just want to briefly talk about the treasury management function, just like broadly, just since we were talking about staking, and basically what's going to happen once the system starts growing and it really, things start scaling and growing autonomously over time, while expenses have gone to zero because everything is run through the stars. Not zero, but fixed expenses have gone to zero. So the idea is then that all profit in the system is just handled through this simple algorithm, and there are no real decisions being made, or at least there's very minimal decisions being made through governance, and for the most part it's all just these automatic predetermined flows of capital through the system, including how much goes to burn, how much goes to staking. So the example, right? So first you have the 10% security and stability maintenance. So this is mainly about dealing with the risk framework. So we were looking at the risk framework just a moment ago in the atlas, right? All those formulas and so on. That stuff has to be really well updated on an ongoing basis. And that's one of the main tasks of the co-executors, which are kind of facilitators. They're basically a sort of a bureaucrat agent. So while the stars are the business agents, the executors are the internal infrastructure and internal governance agents that, among other things, are responsible for maintaining and improving the risk framework. Then there's also payment to the aligned delegates, right? So you have delegates that are actually voting and that are screening out potential malicious votes. And then there is governance accessibility. So this is front end payments, basically to front ends that maintain secure access points for skyholders to stake and then also to delegate to the aligned delegates. So that's a maximum of 10% for this. Then you have the high activity staking reward. So the idea here is that there's for the people that are actively voting through a front end that's also getting these accessibility rewards. Immediately there is an allocation of funds to this that happens before you get the stability capital retention. So this is just to provide rewards to those that have actually recently sort of shown that they're actively staking and actively voting. Because that's of course important for the security of the protocol, and you don't want to risk suddenly having most voters drop off. That could actually cause a lot of potential damage to the protocol and everybody else. And then from there you have stability capital retention, So this is the part where, as the system grows, it'll actually need to retain some amount of a significant buffer of funds actually that goes beyond the risk framework itself. And this is basically like, to simplify, this is similar to the surplus buffer and the size of the surplus buffer over time. But then the way it's been designed now is that like it's only like, even if the stability capital buffer, it has a very high target, so that it's supposed to reach a very high number, there's like a limit to how much can go into that. So you want to avoid that like the suddenly all money is just put into the stability capital buffer, because then what would happen is you would suddenly get no burn and no staking rewards, and that's just like, that's also like an issue, like a stability, like that's also destabilizing for the ecosystem if it's like there's confusion around why did the burn stop or why did the staking rewards stop. So after all of this, you basically get burn rate and staking rewards over here, with everything that remains after subtracting these other amounts. And then there is this 80-20 split between the smart burn engine and then the regular staking rewards, the standard staking rewards. And the standard staking rewards, that's just like the way staking rewards work now, right? So this just ends up being a number, and then that number is paid out like over like every month. There's some like a fixed amount of USDS paid out over the course of the month. And then this number then goes up and down based on ultimately on the net revenue here, and like and then also the amount of funds that is retained in the stability capital buffer. The smart burn engine is a lot more advanced in that it accumulates capital, but and then also as it accumulates that capital, it turns it into risk capital. So funds sitting and waiting in the smart burn buffer, they don't make the system more stable. They instead help the system generate more return, because that's kind of like a choice you can make in the treasury management function. You can choose to use your capital to make the system less risky, or you can choose to use your capital to make the system generate more money. And the smart burn buffer, obviously, that's about Sky token upside. So the funds that are sitting and waiting in the smart burn buffer, they are sort of risk on, like they're used to take more risk and generate more income for the system, and they don't make it more secure. Like they don't reduce the risk of the system. They also don't increase the risk. They just generate as much funds as can be generated without increasing the risk to the system, basically. So I think this is going to be a massively huge deal when we actually get to very close to operating at this stage, and we can start implementing it with, like, there can be like really good communication and like infographics and descriptions of like how this stuff is working, and people can actually track it on chain, and we can, like, there's the uncertainty around what's happening with expenses and why did some money get spent to here or there or something, right? And people are confused because so much is happening. All of that gets externalized once the ecosystem switches to the treasury management function. The only thing missing is the treasury management function itself probably still needs some updates, right? There's still some things to account for. One thing is actually like major legal events, like lawsuits and that kind of stuff, which is something that currently it doesn't really have a good way to deal with that. It only really it only assumes that the kind of the risk, the kind of major events you would expect are the insolvency events, right, where it then would basically issue and raise funds with Sky tokens. So there's going to be some more updates to this, and also potentially reducing this part, like, because this is right now it's targeting something quite high. Yeah, okay, what's written here currently doesn't really make sense to me, but yeah, so some small modifications to this, but otherwise this is like a really cool like stable long-term algorithm that will basically run the entire system. Okay, so there's one, I think, quite relevant question here. So will these formulas be hard enforced on chain in the future? And so how would it apply to stars? Data pipelines need to be integrated off chain. I mean, so the answer is basically they will not be enforced on chain at all, because you just can't. You basically cannot. Like, no matter what you try to enforce on chain, it will always be possible for sky holders to overrule it. Like, it'll always be possible through governance to technically modify the system. So instead, the immutability of the system comes from the atlas, right? It comes from the governance process itself, and then basically like how that ties into recourse of the underlying assets that create value for the ecosystem. So yeah, and that, I mean, that's hard to kind of unpack and explain, but it's basically that the system just ends up being so, like, there's so many kind of checks and balances in place that all exist to prevent the type of change that is not supposed to happen to the system once it is really like sort of in this locked down state, which of course will take many years from now, right? So this is still gonna even when we switch to the treasury management function, like, everything will still be to some extent modifiable, right? Because there could still be mistakes made, or still be like sort of unknowns that need to be dealt with. But then as less and less change happens to the system over time, then eventually the precedent can be set that now just nothing changes, right? And that's then with the point when there simply is not going to be a mechanism for making governance proposals, for instance, to like modify things that are not supposed to be modified. And similarly, you could think of like the ways to look at that from the other perspective is something like how to ensure that the proper monitoring of the capital, like of the risk that the stars are taking us on, how to ensure that stays in place over time. And so that's why there needs to be just as strong checks and balances sort of on the other side to make sure that the things that basically the atlas commits the executors to do and the stars to do, that they will actually be doing those, and that if they don't, then there's going to be consequences. Yeah, which is building all that up is like, it's a huge endeavor, but it's going to be extremely valuable once it's there, because it will be possible to kind of like trace everything transparently from one end to the other to understand why is this secure, why is it unlikely to break, and then you can deliver that in like an LLM kind of chatbot package or something like that, right? So you could have like quite unfamiliar, non-tech savvy users still be able to sort of ask the questions that are relevant to them, and then be sort of guided through understanding why, like how their particular concerns are met through the way the system works. All right, last couple of questions here. Okay, so let's see. Which of the star initiatives do you think could contribute the most to the growth of USDS? Well, I mean, Spark is the only one that's public awareness around right now. But I definitely think that Spark will grow a lot will help grow USDS a lot. I mean, earlier Rajiv was just showing how we are seeing a lot of growth from yUSDC, right, which is an innovation that Spark introduced. And so basically I would expect that the Spark team would come up with more cool innovations like yUSDC that's going to help them grow the yUSDS, the yUSDS supply and the USDS supply, and also help them generate generate income to their own star. So they'll basically do it for selfish reasons, but it will happen to also benefit Sky. And there's also just the fact that then also Spark will have a huge amount of SPK tokens being farmed out to USDS holders. So that I would also expect to result in a USDS, in a growth, like in growth of USDS demand. But then imagine you have like just a huge amount of stars, right, with talented founders all coming up with these kind of business models and all doing it for their own selfish gain ultimately, but in a way that's like regulated and with checks and balances, so that all of their profit-seeking actions benefit like synergizes with and taps into the economies of scale of the whole ecosystem, and also helps contribute to it. So it also benefits everybody else. Any updates on Chronicle? How's it used by Sky, and who uses it? Yeah, so I mean, Chronicle is like it's not a star, right? It's its own project that was incubated out of basically Sky Core. But right now you can earn the tokens on Sky Money, and I think a couple of other DeFi front ends. They also support Chronicle points, and so Chronicle points will eventually turn into exposure to Chronicle, the project, and the success of this project. And yeah, I think, I mean, it's actually really huge because it's securing Spark, and it's securing the core vaults in Sky. And it's just like it has its own entire roadmap on rolling out improvements and so on. You can go, you can follow them on Twitter, for instance, and see the latest updates. And yeah, like, so eventually, just like Spark, Chronicle will launch fully, right? And then the CLE token will launch. Yeah, right now the exclusive way to get exposure to this is through USDS on Sky Money, and I think this has been really overlooked. So there's like very low TVL on this farm, which means that it likely is going to be quite valuable to tap into. All right, and then the last question is my tweet from the other day, yesterday, in fact, where I wrote, what was it? I wrote, Sky is Bitcoin, Tether, Palantir, and Y Combinator. So basically, I mean, the Bitcoin part, that's just to emphasize the immutability of the system, right? The desired immutability. It could also be an Ethereum, and maybe that is more correct in the sense that obviously Sky will never be as decentralized and as immutable as Bitcoin. And in fact, it will not even be as decentralized and as immutable as Ethereum. At least it's sort of like depending on what the kind of the dimension you look at. I guess you could make the argument in that in some ways it'll be more decentralized and immutable than both Bitcoin and Ethereum. And that's because in both cases there's sort of these like unknown, like there's these like questions with unknown answers. Like with Bitcoin, it's like, how do you keep it secure once Bitcoin emissions go to zero? And with Ethereum, it's something like, what's gonna like is the Ethereum Foundation just simply going to control the technical roadmap forever? And like ultimately, I think obviously even with those potential concerns for Bitcoin and Ethereum, they are like extremely decentralized, extremely resilient systems. So it's not like they cannot overcome that in a satisfactory way. But it's just right now it's still not actually fully understood how that exactly will be overcome, I think. And of course, with Sky, it's not like there's a complete, full end-to-end understanding of how to keep it as immutable as possible and keep it as decentralized and resilient and low cost and efficient as possible over time. But there is like there's a plan for how, like, I mean, there's a process for how to get to that point, right? Which is still going to be many years out in the future. But then it's also like, then what's kind of really impressive is that it encompasses all of these other things, right? It also is obviously a stablecoin ecosystem. Then there's also like the Palantir part of it, right? Which is that basically, I mean, I was just showing that earlier, right? That the way something like the allocation system works for each star is actually that they can in real time analyze, integrate all of the data they can find that's relevant to their business model. And Sky can also at the same time, I mean, or rather the broader ecosystem, so everybody in Sky, right? The executors, the community members, the token holders, the delegates, they can all independently monitor and verify this stuff in real time. So it's kind of like running a blockchain in a sense, but rather than running a blockchain node and relaying transactions, you're like basically like double checking that the stars are behaving as they should and they're following the rules. And then if you find them breaking the rules, you can actually make money through whistleblowing, essentially. So there's like a monetary upside to actually kind of running the nodes in this kind of system. And yeah, like, and then I mean, this is like, because how it's built around the atlas, right? That the data structure of the atlas makes all of this possible and tractable. And the atlas ultimately is built as like a gigantic graph and like a knowledge base, essentially, right? So that makes it function kind of like the way Palantir powers organizations, right? But it's just open source, and it's, you know, many stars all using the same standard for how they run the data, and it's all transparent, and then so ultimately it all rolls up and connects together into one gigantic real-time knowledge base, right, which is the atlas. And then that's Y Combinator, which is like, yeah, and then it keeps like incubating and sort of standing up new stars to fill out all of the possible markets that exist. And then once we're done with that, right? So once there's a star for every single possible market you can imagine, then they will just, from there, then it just gets into this like extreme competition, right? Then you just get more and more specialized stars, and you get smaller and smaller margins for like stuff that is not basically like AI edge, right? So of course, if you build up like a technology edge with better AI capabilities, then you can sort of keep a moat going even in a star, right? But the kind of all the kind of the simple moats over time will be completely eroded, right? If you're not continuously like increasing your ability to compete and adapt in ecosystem, and that's just going to be something that ends up benefiting the end user, basically. So the USDS holders are ultimately the beneficiaries of this, which in turn then helps, like, it makes the ecosystem just extremely efficient, and as a result also means that it'll just grow and will like, and that the Sky token holders and the Sky ecosystem as a whole has this like very extreme scaling focused business approach. Then there's this last question, or last comment, I guess it's more like, right, that's saying it's great to bring fixed costs to zero, but the real challenge lies in finding the growth levers, even if it requires investment. Yeah, this is kind of what's funny about this. This is sort of the sentiment that's been around bringing fixed costs to zero, because what people then realize is, well, if you bring the fixed costs of the core system to zero, then there's not going to be people like working to grow the system and working to improve the system and so on. And so first of all, of course, there will be these like mechanisms set up to ensure there is a lot of core work still happening to Sky, right? It's not like the core work just stops, but it's going to happen outside of governance, right? So the goal is to not have any of that sort of entangled with governance. So you have people on the forum Dunning-Krugering about stuff and this kind of stuff, right? Like, you really don't, just really do not want sort of DAO participants to be involved in finding growth levers and deciding, making investment decisions and that kind of stuff. But then the really interesting answer is, of course, this is all about the stars, right? The stars are then the place where you could have people come together with crazy ideas. You can have communities trying to make decisions, experimenting with new governance models and all that. All of that is possible with the stars, because it's okay if the stars fail, right? If they try something crazy and it doesn't work, or they like have some radical democracy or whatever they will try, they can try all of those things, and even if they fail, Sky at the core is going to be able to prevent that from kind of causing damage to the wider ecosystem. All right, that's it. I think that was almost an hour. So thanks for joining, all of you. And then next week, I'm sure it'll be really interesting.
Thank you everyone for joining, and yeah, see you in the forums and next week for hopefully exciting announcements. Thank